Good afternoon. Today is Thursday, July 7th, 2022. I'm Joe Terril, president of Terril & Company, independent wealth managers in St. Louis, Missouri, with approximately $700 million in discretionary assets under advisement. This is a video update that we present for our clients and our contemporaries and other people that follow our thoughts and are interested in our opinions. With that introduction out of the way, the raging debate that seems to be going on right now amongst investors, economists, bankers, etc., is the question of, are we already in a recession? Is a recession right around the corner? How serious may this recession be? In addition to that, the thinking that's developing out there is we're in a recession and therefore interest rates will no longer need to go higher. And in addition to that, the thinking is, well, we're in a recession, therefore inflation is going to come back down from running at 8.5% to a 2.5% level that the Federal Reserve Bank would like to see this at, and therefore a person should invest accordingly for lower inflation, lower interest rates, and a recession that may be pretty sharp and deep. That's what the debate is. That's what the news media is reporting about. That's what Wall Street in general believes is going to happen. At Terril & Company, we think basically in one word, that's nonsense. We're not in a recession. Very unlikely we're going to have an economic recession between now and the end of the year. Recent figures that are out on durable goods orders, very strong. The balance of trade figures that were just out, exports and imports both higher, not lower, showing more business activity. The figures on Institute of Supply Management for services, that index was out 48 hours ago. All 18 components of the index were higher, not lower. Unemployment is very low. Wages are going up. Highly unlikely you would see consumer spending deteriorate in this type of environment to the point where it could cause a recession. The other side of the economy, business spending. What you're seeing going on right now is a major increase in business spending in order to shorten their supply lines. Said in simple English, companies all over the world are building factories and supply distribution centers in the United States. This may increase their cost, but companies feel they'll get a certain amount of that back in lower transportation costs, and they will be able to get their products. Right now, when they're importing from China or other places around the world, as we all know, they cannot get these products. So businesses across all spectrums, they're already building, they're already making plans to spend much more money and build plant and equipment in the United States. And along with building plant and equipment comes more orders for equipment, more demand for employees. So these are not the type of things that are on the normal cusp of a recession when we see things like this happen, business spending is going to be okay. So we wonder sometimes, why do people believe that we're getting ready to have a recession or we're already in a recession? It's not 100% of the reason, but in my 40+ years of being in this business, I'm well aware of the fact that what goes on in New York with major institutions, with hedge funds, with analysts, and people that are heavily located on the East Coast, what is going on there personally, they believe is going on throughout the United States. After all, it must be. Well, there is no question Wall Street is in a recession. Most of the investment bankers are struggling for work. Payments of bonuses and salaries are down dramatically along with the market. Volumes are down dramatically. Most of the speculative investments have all fallen apart. So it doesn't surprise me to see major institutions, economists at major banks, and etc., believing and telling everybody, well, we must be in a recession. Yes, they're in recession, but that doesn't mean the rest of the country is. Spending by consumers is continuing to be strong, and business throughout the United States is continuing to be strong. So no recession. Will we have one next spring, next summer? I don't know. We'll be on top of it and following it to see how consumer sentiment is going to hold up. Inflation, yes, inflation is going to continue. It's not getting ready to come back down to 2.5%. We haven't seen labor inflation and housing inflation work through the numbers yet. We will see that between now and the end of the year. And certainly as labor inflation goes through the economy, the natural response is people raise their prices to try and recapture the additional cost of labor. So Terril and Company, no recession, no inflation. And then the third component of this conversation is, well, then interest rates are going to stay down in this 2.5–3% level. No, ultimately interest rates are going to have to move higher. The markets that believe the increase in interest rates is going to be finished by the end of this year are going to be wrong. A 10-year government bond can go to 4% or higher. We're not going to see a 45% growth in M2 money supply shut down by seeing interest rates go up to 3%. No. Interest rates higher, inflation higher, strong economy. This does not translate to that investment markets are really going to be good. No. Corporate profits are going to surprise people to the downside. Expenses for businesses, for the things we're talking about. Labor, cost of deliveries, freight, cost of energy, all of these things are going higher for businesses. Capital expenditures are going higher. Consequently, we will not see a big 10–15% gain in corporate profits like people are expecting and got used to. We're going to be lucky between now and the end of the year if corporate profits can remain flat. So we're negative on the stock market. We've had big corrections so far this year, but we think we can go another 10 or 15% to the downside when people realize inflation is not over with, the increase in interest rates is not over with, and then the third issue there, that corporate profits are going to surprise to the downside. So we better stop right there. Brian Curtis, thank you for helping us produce the updated video, and we'll be back in about 3 weeks with another update. Thank you and have a good afternoon.